Good morning to everyone joining us from the East Coast, and good evening to all of you joining us from Indonesia and beyond. Welcome to the first webinar in the second annual discussion series organized by the Kroll Institute and the Center for International Private Enterprise, exploring critical contemporary issues in the global economy. In the spring, the conversations were around what role ESG investing will play in post-pandemic recovery. This fall, we're examining the nexus of technology, democracy, good governance, and driving economic growth. The Kroll Institute for Good Governance was founded to open the lens on issues of truth, transparency, and good governance in the public and private sectors. The Center for International Private Enterprise, or CIPE as we call it, is a nonprofit working at the intersection of democratic and economic development with a mission to strengthen democracy through private enterprise and market-oriented reform. On behalf of the board and leadership of CIPE, I'd like to thank Kroll for their continued collaboration and support in organizing this series of discussions. My name is Louisa Tomar. I'm a senior program officer at CIPE, and I'll be moderating today's discussion, Shaping Regulation to Promote Business Resiliency and Growth in the Digital Economy. In the wake of COVID-19, a shifting trade landscape and rapid digital transformation of businesses and economies, consensus around the governance of the digital economy remains very much in its infancy. Meanwhile, we are seeing new legislation in many markets designed to address data flows to data sovereignty, competition policy, digital taxation, and much of it with an eye towards the largest technology companies. Today's discussion will focus on the wider business community and the regulations that promote resiliency, inclusive growth, and recovery. I'm delighted to be joined by our esteemed panelists, Felippa Amanta, the head of research at the Center for Indonesian Policy Studies, Ken Joseph, the managing director of financial services compliance and regulation at Kroll, and Efraim Chalamish, a Kroll Institute Fellow and Senior Advisor, as well as the leader of Kroll's Israel practice. A bit of housekeeping before we get started. Please post any questions or comments in the Q&A and throughout the discussion, and we'll leave time at the end for our speakers to address them. To start us off, I'm asking each panelist to introduce their work and themselves and share from their perspective how the digital economy is linked with post-pandemic global economic recovery. Ken, I'd like to start with you.
Greetings, everyone. Ken Joseph, Managing Director at Kroll. My work is really around SEC, US SEC related regulations and how it impacts digital currencies, blockchain technology, and so on. I have been with Kroll for almost 4 years now, and I'm also a member of the Kroll Institute. Would you like me to give my views, or wait until Effie and Felippa give their introduction?
Yeah, please give us your view of how the digital economy is linked with post-pandemic global economic recovery.
Apologies. The digital economy is obviously here to stay. The proverbial cat is out of the bag, so to speak. In my view, the pandemic did not hinder the continued innovation in the digital economy. What did retard growth is a continued lack of clarity in the regulatory landscape, of course, volatility in certain cryptocurrencies, and I think lingering concerns over privacy and data security. Fortunately, during the current pandemic, we have seen governments step in to keep money flowing, to support economies, and to keep the economy operating relatively few of interruptions. And I think we have started to see some robust recoveries, supply chain issues aside, underway. The fiat-based system, I think, worked this time, but I think we would be remiss if we did not look at the advantages and efficiencies of and the digital economy, or DeFi, which I believe could operate concurrently with more traditional systems and more traditional fiat systems.
Great, thank you very much, Ken. And you bring up a really good point about fiat and cryptocurrencies, and that's something we can get into further. I'd like to now turn it over to Felippa to introduce herself and her work and also tackle the same question.
Sure. Thank you so much, Louisa. Good morning, good evening to everyone. Thank you so much for the invitation. So I am Felippa. I'm the head of research at Center for Indonesian Policy Studies, which is a nonprofit think tank based in Jakarta, Indonesia, working to advance policy reforms for free and prosperous income Indonesia, especially for low-income Indonesians, especially through a free market perspective. And in the past couple of years, we've been really looking at the digital economy as it is a growing sector in Indonesia. And we really believe that it has the potential to not only bring economic recovery for Indonesia, but also bring prosperity for the people involved in it, especially for low-income Indonesians. So we think that harnessing the potential of the digital economy is key to economic recovery. And we can see that very practically in Indonesia, as the economy contracted by about 2%, the digital economy sector is still among the few that still saw positive growth, and in fact is growing more rapidly, growing by around 10% last year. And the pandemic really has accelerated digitalization. Even despite the pandemic, even despite the economic slowdown, Indonesia is still predicted to become the largest digital economy in Southeast Asia by 2025, especially driven by e-commerce, travel, and financial technology, but also a growing health tech, especially during the pandemic, and ed tech as well, as now schools have also moved in the digital landscape. But while all of this is growing, the regulatory landscape, on the other hand, in Indonesia especially, is still sort of like in its infancy. I think policymakers are still trying to figure out or trying to address how they can regulate the digital economy sector better. So that's where CIPS is working on. We've published a couple of policy briefs and policy papers relating to personal data protection regulation, consumer protection in digital economy, cybersecurity, digital taxation. And in fact, a couple of weeks ago, we also just held a digital week, DG Week 2021, talking about gathering private sector and policymakers to talk about all things digital economy, especially in the regulatory framework. And one other thing that I want to say about how digital economy ties to economic recovery, I think it's also important to acknowledge how this would especially benefit the low-income communities, as digital economy allows for a more inclusive economic recovery. We see that in Indonesia with more lower income, rural people from rural areas and women getting empowered and getting broader market access and getting more economic opportunities through digital economy. So looking forward to discussing then how that would evolve, especially after the pandemic. Back to you, Louisa. Thank you.
Thank you, Felippa. You bring up a lot of great points, and I want to dive further into some of the trends you're seeing in Indonesia. But first, I'd like Efraim Chalamish to introduce himself and also tackle the same question. Thank you.
Thank you very much, Louisa. I'm excited to be here with all of you this morning, this evening. First of all, thank you to you, Mark, and the rest of the team at CIPE for this fantastic partnership. It's been going on for a few years now, and we feel very grateful for that. And thank you, Felippa, for bringing Indonesia and the rest of the region to the table, such an important country and economy to be included in such an important discussion. And I really hope that this is just the beginning of a dialogue which will bring together East and West, public and private sectors together. As you mentioned before, Louisa, my name is Efraim Chalamish. I'm a professor at New York University, and I'm also a senior advisor with Kroll. I'm an Institute Fellow here at Kroll, and also the head of Israel, which is part, of course, of the Middle East region. So my views are, as you can imagine, interdisciplinary and diverse when it comes to geography and subject matter expertise. And in fact, I've been dealing with various issues related to trade policy, investment policy, M&A, international arbitration, different parts of the topic of the day, which is the digital economy and economic growth. When I started dealing with some of these issues almost 20 years ago, my own interest was about harmonization versus divergence, in the sense that at the time, one of the most exciting issues was how to create a harmonization in the investment policy space in a world which is fully fragmented. And when you compare Indonesia to Latin America to New York, each one of these regions has its own investment profile, its own economic profile, but at the same time, it was very important at the time to create better harmonization in the international economic space. And indeed, fast forward to 2021, when you look at trade policy, when you look at bilateral investment treaties, when you look at cutting edge financial instruments like the ones my dear colleague Ken mentioned before in the cryptocurrency space, it's all coming towards one direction in the future, how we basically work together in this new digital economy to apply and imply the same legal instrument in different parts of the world. As we all know, when you take similar directions or similar legal instrument and we apply them to different regions, we discover that each region or each economy reacts differently. Each region or each economy has its own challenges and own opportunities. So I think one of the things we want to kind of think about as we go through these issues today, and many of our friends, partners, clients are listening to us, there are a couple of kind of key components that we have to keep in mind. One is the infrastructure. In other words, since the digital economy is globalized by nature, how to keep the digital infrastructure strong, resilient, global, that you don't, in a reality where sometimes countries try to take advantage of the infrastructure. This is one big issue that is on the table. The second thing is about the users of the digital economy, how to make sure, and Felippa said it so beautifully, how to make sure that everyone will be part of the access story, including low-income players in the Indonesian and the global economy. And then finally, the public-private partnership, I will elaborate on that a little bit more in a few minutes, how to make sure that that great forums like this one today is just the beginning, and we see most of them. Because unfortunately, if you look historically, whether it's environmental policy, climate change, and other things, sometimes we have the feeling that governments and private sector institutions speak in parallel, and they do not necessarily spend enough time with each other for all types of reasons that I'm sure Ken will explain as well. And again, thank you very much for joining us from around the world.
I just wanted to respond to something that that Effie said, not to contradict, but look, the digital economy is not separate from the global economy. And I think what we have seen in recent years is sort of an increasing fragmentation of rules and regulations and attitudes and so on. And I just think that at its best, clearly the global economy has to be intertwined for it to work very well. And what we're seeing in the digital economy, again, part of the global economy, is that same sort of fragmentation with some additional barriers. We talked about, as Felippa said, sort of this democratization of access. But yes, so we're dealing with many parts of the world where people don't have access to mobile phones or to the internet or high-speed internet. So there are a number of barriers that I think that are currently in place, regulation aside, that would have to be overcome, to Effie's point, building that infrastructure, if you will, to make sure that the digital economy can operate with some level of fluidity, if you will.
Absolutely. You both bring up really excellent points and help kind of drive us to our second question. So I heard you both talk about the digital economy being intertwined. It's global. There is a lack of harmonization. And of course, a policy that may work well in one market or economy is not going to work the same way everywhere for a number of different factors, including infrastructure realities. But I want to ask, starting with you, Ken, what policy actions are you seeing that in your mind is accelerating economic recovery or accelerating the spread of the digital economy in an inclusive way?
I think most of the activity, at least in the US, on the positive side, has come from the private sector. As I mentioned earlier, the digital economy is here, and I believe it's here to stay. I think you're seeing an increasing number of established brick and mortar type cornerstone enterprises who are at least dipping their toes in the water, so to speak, and experimenting with the digital economy, mobile payment systems, and things like that. Where I think there's still a lot of work to be done is on the regulatory side, because you can innovate all day, you can adopt all day. There's regulatory uncertainty that leads to regulatory arbitrage. It leads to increased costs, if you will. And what we're seeing is sort of an attitude that ranges from outright hostility to the digital economy to mistrust. And then on the other side to acceptance and really trying to find a way to make it work because of the efficiencies that, faster payments, the democratization of access, if you will, benefits like that that ultimately could assist economies in growing and developing.
Effie, can I ask you from your perspective, or is there anything additional you would add?
Sure. I think one good example for this change that we just heard about is trade policy. So many years ago, trade organizations like the World Trade Organizations, and even on the national level, unfortunately, it was associated with deadlock, with slow procedures, with not helping the private sector enough. And people tried really to avoid moving forward through various trade channels when it comes to critical parts of the economy. And here we are really promoting private enterprises and the international private economy. And they felt that they're a little bit neglected in this process. I think fast forward to today, people realize that because so much is driven by digital assets, the digital economy, this is exactly where international organizations or trade negotiations can really make a difference. I think we heard today examples like how you tax digital products or how you exchange certain products. I think this is the place where it makes a difference. I'll just give a couple of examples before Felippa will take over. So I think when it comes to digital infrastructure, for example, it's very important that private companies, when they invest abroad, they're not required to use certain infrastructure assets like data centers. In other words, it's very important for companies to have their own data centers or to be creative with their infrastructure options when they invest in foreign markets. Another thing is, of course, how to protect the unique digital asset that we're creating as private enterprises. Kroll is doing a lot of work on that, working with companies around the world on protecting their sensitive digital assets. Just think about, all these companies using algorithm, AI, big data analysis in order to create great products. It all sounds terrific, but when you invest in foreign markets, when you use local teams, you have to make sure that your unique algorithm is protected and you're not required by local foreign governments to share these kind of unique IP assets that you have. Another great example about that is open source system versus closed source. So of course, now one of the hottest trends in the digital economy for many startups and even bigger companies is the ability to share with the world your code and actually work together with other companies with respect to your own technologies. But still, this is the minority. It's not the majority. Majority of companies today, including the largest one, are working very, very hard and investing a lot of money in creating their own unique IP product, and then eventually they sell it to consumers. So all these companies, when they invest in foreign markets, they want to know that that their IP is protected and they're not required by their local governments to share this IP. But on the other hand, whenever they want to be part of open source initiatives, they have the opportunity to do that. And I can tell you on the academic and policy level, I see that all the time, whether universities or other policy forums, people are working very, very hard to make sure that when private enterprises are investing in foreign market, they really can move forward without disruptions. And here, going back to my initial point, trade policy and investment strategies are very important.
Thank you. You bring up a lot of great points, and I want to dig a bit more into that, especially some of that IP and as it relates to sort of business to business services and what that type of innovation in different markets can mean for local business communities and access to those tools and services. I also want to first switch over to Felippa and hear, what she thinks from an Indonesian or perhaps the Southeast Asia perspective.
Sure. I think what Ken and Effie said, I completely agree with about how private sector are really driving a lot of the innovations and investments on the digital economy. But on the regulatory side, I think still drawing from the earlier concepts of harmonization versus divergence, I think we're seeing that contestation happening at the moment. So for harmonization, for example, we are seeing a lot of efforts to harmonize regulatory framework to make cross-border transactions much easier. For example, here we have just recently ratified the ASEAN agreement on e-commerce, which is a regional level agreement that is supposed to really facilitate cross-border transactions and including a lot of the cooperations on consumer protection, cybersecurity, things like that. Which is a really good effort from our part, but I think it still remains to be seen whether the agreement can actually be implemented or it remains just an international goal or target or such an ideal. Because on the other hand, we are also seeing a large and a growing number of digital trade restrictive policies. In fact, I think the OECD published an index on digital trade restrictions, and they're seeing a lot more trade restrictive measures on, as Effie was mentioning, the importance of investment. That is also something that is increasingly worrying as countries like Indonesia are increasing limitations on foreign ownership, for example, or restrictions on intermediary liability of tech sectors and tariffs or other export and import restrictions. So there are progresses in which there are harmonization to some extent. I guess another example of harmonization would be how the Indonesian personal data protection draft bill that is currently being deliberated is looking very closely into the EU GDPR and trying as best as it can to closely harmonize or closely be aligned with the international EU GDPR. But also at the same time, again, on the other contradictory side, we are pushing for data localization. So in the effort of making or shaping the policy on digital economy, we're seeing a lot of tension between those, I guess, necessary needs of harmonizing internationally, but also that local nationalist sentiment of having your own nationalistic digital economy. But I guess underlying that, I think is a broader question or broader issue of how we can regulate the digital economy with private sector involvement as well. And that for CIPS perspective, I think really aligns itself to radically transforming how we think of policymaking and the tools of policies that can and should be implemented to address the digital economy policies.
Thank you so much, Felippa. Effie, I want to go back to you. So she used the bad word, data localization. So I want to hear from your perspective, what your thoughts are. We do see a lot of countries drafting legislation that looks very similar to GDPR. We also see a lot of data localization efforts. You brought up, the needs of small business or innovative business when it comes to their IP. So, is there an example of a good approach to this, how you balance these different interests in the digital economy?
Sure. Actually, I think GDPR is a terrific example where people were very cautious, very concerned at the beginning of the process. And now it's been perceived as just the cost of doing business when you do business internationally. When you have a good initial case study where people invest a lot of time in the process in terms of coming with very concrete rules, and slowly but surely, all these rules are becoming actually global standards and not only European standards. This is a great example how other parts of the economy or the regulatory frameworks can kind of follow and do things similarly. So now people, even outside of the European region, they follow GDPR rules as best practices. They try to think about what's next after GDPR or after the California new legislation. And people, I think, realize that at some point, more and more rules will be harmonized. When we talk to private enterprises, when I speak to CEOs of companies, frankly, they're less concerned about data privacy rules, because many of them understand that this is such an important part of the economy today. They actually, maybe I'll share two kind of thoughts, what keeps them awake at night. One is not so much the rules themselves, than the negotiations and the communication around the rules. In other words, I remember a couple of years ago, the US State Department, basically the foreign ministry of the US government, they came up with this platform where they create a virtual platform where people, individuals, companies around the world can communicate directly with the State Department when it comes to foreign policy related facts. That was at the beginning unheard of. People said, why should we listen to companies and individuals when it comes to foreign policy? But it came from a world where the State Department realized that they have to communicate to individuals and companies when it comes to foreign policy. I think same with data privacy rules or other things. Here I talk about digital economy not as goods or the solutions, but actually the tool, the communication instrument by which you can actually work with governments in order to come up with new innovative ideas about how to regulate the digital economy. So for example, like the example I gave about the US State Department, I think we should see more and more platforms where individuals and companies communicate directly to governments and international institutions, organizations, when they work on the next kind of stage after GDPR and other data privacy rules. Another thing which I hear quite a lot from CEOs and other private executives is basically the state of the economy today, because that's going back to what Felippa said about the importance of Indonesia and the region. Now, because of the sensitivity of certain rules, people start thinking about kind of regional and national legislation in this space. And as a result of that, companies need to do business in different parts of the world very, very differently. And this is, of course, a huge risk when it comes to doing business in the global economy, because companies by nature are globalized and trying to sell the same goods to different parts of the world. Another aspect of that is security related legislation. In other words, if a couple of years ago, people were concerned about buying sensitive technology assets in the US, and we had the whole CFIUS revolution in the US market, now more and more countries are like that, adopting similar legislation and making it very, very hard for companies to invest in digital assets. So the digital economy and post-COVID economic growth sounds great, but if you allow governments to pass security-related legislation without making sure that it's well balanced with open economy, I think this is a huge risk. So just to summarize, I think these two issues, security-related legislation and siloed economies, and the other issue is basically how to communicate with governments to making sure that private companies have seats in the table. These are issues that keep companies awake at night, and I think senior executives would like to work with governments and international organizations on that.
Ken, please.
Yeah, just to follow up on the point that Effie made, I totally agree that sort of a public-private dialogue is part of the solution here. On the private side, we complain that governments are fragmented and regulatory regimes are fragmented. On the private side, there's also fragmentation. Who is having that conversation with the governmental bodies? Who is going to be the lead, if you will, to suggest a framework? There's so many innovations, and I don't think the industry has really itself decided on what the infrastructure ought to look like, what the standards ought to look like. And until you do that, you're not going to be able to have a conversation about what the solution is going to be.
If I may also touch on that, because I think Efraim can raise a really good point that CIPS have been looking at, which is the public-private dialogue. But there are sometimes misconceptions about what public-private dialogue means, because oftentimes, especially for policymakers, it can be misconstrued as just like a check mark that you tick after you draft a regulation and then you're supposed to communicate it with private sector, whereas that's not the point of a public-private dialogue. Public-private dialogue is supposed to be, as Ken mentioned, inclusive, making sure that who is taking a seat at the table is not just the big companies, not just the big multinational, transnational companies, but also hearing from the local, maybe startups, businesses, and other types of diverse private sector in the digital economy. That's the first point, inclusivity. And then the second point is continuity as well. I think the public-private dialogue oftentimes happen towards the end once they're already trying to pass the draft, and then they're just trying to have a justification that this has gone through a public consultation. Whereas I think public-private dialogue should be even from the start, starting from discussing what the policy should look like, and also, of course, in the middle, but of course, at the end as well, by monitoring and then evaluating how the current policy is working, and then also having that space to then adopt or change the whole policy if it doesn't make sense anymore. And the last but not least, the public-private dialogue also comes into play in terms of actually implementing it, because we see that I think there's a space for more sharing of responsibility in terms of enforcement and implementation of the policy themselves, not just by the government institutions, but government with associations and with civil society organizations, things like that. So I think it's a whole continuum of public-private dialogue and where private sector can play a role in the policy-making process.
I'm sorry, Anthony, go ahead.
No, I think Felippa's point is super critical, because definitions and understanding the process is such an important part of the story, because public-private partnership or engagement with the private sector could be a very loose concept. So I just wanted to give one example, and then I would love to hear Ken's thoughts. I would love to give one example where people actually walk the talk and participate in this process in a more constructive way. This is an area that I've done a lot of work on, which is state-owned companies and sovereign financial institutions. So if you look at the economy today, the largest players in the economy today, they're not necessarily in the financial world private operational companies. There are actually also financial institutions like pension funds, sovereign wealth funds, and other state-linked institutions, as we call it. And these institutions manage trillions and trillions of funds, and they're eventually invested in the private sector in companies like the ones we're talking about, startups, unicorns, and other operational companies that are part of the digital economy. They will tell you many, many times that they want to deploy their capital, which is, of course, driven by nations' wealth. They would love to deploy more capital into, for example, infrastructure related ventures, digital economy related pipelines, computers, data centers. They would love to do more, but sometimes some of these projects, because they involve sovereign governments, some of them, they're 5, 10, 15 years projects, and they want to deploy the capital much sooner in order to see better returns, because at the end of the day, some of these returns go to pension holders and people who really need this funding over the next couple of years. So one idea how to think about is to help all these asset owners to be part of this dialogue and to help them to deploy the capital quicker and in a more efficient way. One concrete example that I can give, right now there are, as we all know, the climate change negotiations, and the asset owners and sovereign funds are part of it, and they're working with sovereign governments and the G7 group in order to come up with new rules how to deploy capital, sovereign capital, better with the government PPP project, public-private partnerships, in order to deploy this capital in a constructive way. So I think same way that we talk about it in the climate change setting, we should definitely talk about it in the digital economy setting. So Felippa's point about how diverse this world is and different ways to bring the private sector in a more constructive manner and not just check the box. This is another great way to do that. Ken, please.
No, fair point, Effie. Look, my concern is that this hope for private-public dialogue, if you will, which I think we all agree has to be part of the solution, right now is really a private-private dialogue because many governments, I think, lack the expertise and the understanding of what exactly the digital economy is, what infrastructure is required. So those types of governments then get influenced by the larger, more sophisticated, better financed players in the space. And it's almost a race to the courthouse, so to speak. And that leaves out a whole sector of innovators on the private side who may be subject to infrastructures that are agreed upon between certain sectors in the private and the government, which don't necessarily serve to foster the development of the digital economy.
Thank you, Ken. I want to follow up on that. So in your introduction, you talked about cryptocurrency and fiat. Obviously, you're in the financial services sector. So, I mean, that's an industry that is very heavily regulated with regulations quite harmonized globally. I'm curious, would you want to see a similar approach when it comes to the full digitalization of the global financial sector? I mean, obviously we have that to some extent, but I'm less familiar with cryptocurrency. I mean, what are you seeing out there? And then the second piece to that would be, we do see a lot of regulatory sandboxes when it comes to, innovative digital financial services and tools, but that's very often at the national level, and there's rarely sort of interoperability across, national borders when it comes to a lot of these financial services. I know that's many questions in one, so feel free to take whatever piece of that you'd like.
I'm gonna address two aspects of it, I think, and tell me if I got them wrong. First of all, the premise that there is a harmonized regulatory scheme for the regulation of cryptocurrency, I think, is not accurate. I'm not sure if that's the point that you were making, but I just want to make sure that we're clear on that. And just using from a U.S. lens, cryptocurrencies could be treated as securities one day, commodities the next, property the next, currency the next, and subject to a real patchwork, which leads to uncertainty of what the regulatory requirements are. You couple that with I think, a high level of suspicion, if you will, perhaps well-deserved, but suspicion nevertheless, about what is cryptocurrency and how it ultimately interacts with, if it does, fiat currency, what threats it places on fiat currency, and whether it could be used for non-government sanctioned purposes, such as fraud, terrorist financing, anti-money laundering, and so on. So it is not harmonized in the US in my view, and I think that's, if we try to look ahead, that's one area where there could be certainly better coordination in order to foster development and innovation. With regards to the regulatory sandbox issue, that's still an issue under the discussion in the US. I think from a regulatory standpoint, the mood still is either uncertainty or outright hostility. You just have to look at the number of SEC enforcement actions for illegal offerings involving coins, digital coins, and the uncertainty and inertia really that those events have had on the industry. Nevertheless, innovation continues. As I said before, certain of the big banks, the very established financial institutions have indeed realizing that digital DeFi, digital economies, and so on is very much part of the future, have started, I would say, experimenting and investing in that space. The last point I want to make is that the digital economy does not develop or does not fully develop, I should say, without a similar development in regulation technology. Because for governments to support it, for investors and consumers to have confidence in it, there is some level of regulation and certainty and insurance and backstopping that is going to be required in order to give the confidence in the digital space.
Thank you, Ken. I appreciate that. I want to turn to Felippa quickly. So I know CIPS has done some interesting work on co-regulation. That's not quite getting into the regulatory sandbox space, but I'm curious sort of from the perspective of CIPS as a think tank, how do you see government and the private sector working together to address some of this uncertainty in the regulatory space?
Thank you so much, Louisa. And I think I wanted to respond quickly as well to what Ken was observing about regulatory sandbox and how it's being applied in the United States. Interestingly enough, in the Indonesian context, government bodies that are in charge of financial technology is actually much more embracing of a regulatory sandbox. We see that in the Central Bank of Indonesia, as well as the Financial Services Authority, actively providing the space for a regulatory sandbox with new financial technology startups, allowing that space to innovate and provide more products in a safe, perceived safer environment. And we are seeing that it's of course it's still in a very early stages, but it's looking like it has a lot of positive benefits because it allows the private sectors to innovate, and by extension, the products that they're innovating then provides financial inclusion benefits to low-income Indonesians. And also it allows policymakers to develop the regulatory framework that is more suitable to enable the innovation while at the same time making sure that consumers are protected. Because as what we've alluded to a couple of times, the government policymakers themselves don't really understand what's going on in the digital economy. So they don't have the technological know-how or technological capacity. So we're seeing that the regulatory sandbox is a tool, part of the co-regulation that we're advocating as well. It's a tool to help bridge that information asymmetry for the policymakers and having and opening a space for private enterprise to actually play a role in developing the policies themselves. But that is not just the only type of co-regulation tools. So co-regulation as an approach basically is a broad range of tools to allow for a sharing of responsibility and in policymaking, and as well as in the implementation. And moving from regulatory sandbox, we're also seeing practices like, for example, keeping a regulatory umbrella that is adaptable and quite flexible, that allows for associations to then develop their own guidelines. We see this in financial tech as well, with the financial tech associations having their own guidelines for their members on what should be included in terms and conditions, how you should approach low-income consumers, what's the interest rates that make sense for Indonesia, but leaving that to private sector and minimizing government intervention in that space, I think have worked really well, and allowing the financial technology sector in Indonesia to thrive. I think we're seeing a lot more fintech startups, we're seeing a lot more fintech user numbers, and also the loans that are being granted through fintech applications have I think doubled or tripled even in the past couple of years. So that's just a case study from Indonesia.
It sounds like you're proposing something very radical, which is leave it to the industry to regulate itself. I just want to respond to that. It's not as radical as it sounds, because, for example, just in the securities context in the US, at least as it relates to broker dealers, there is a self-regulatory organization. A similar concept on the commodities side as well. So while there is a broader federal and maybe even state securities law framework, there is precedent, if you will, for having the industry essentially police itself, subject to the oversight of government, certainly, but certainly be on the front lines of policing itself with the right levels of accountability if you don't police accurately and so on.
Effie, do you want to weigh in on this conversation as well?
I just wanted to add a separate component, but I think it's quite important, especially in light of Felippa's and Ken's discussion, which is how you actually solve disputes once you finally agree on regulatory frameworks. So we spent so much time today thinking what will be the ideal way to approach digital trade or digital usage, but unfortunately, the more you use a product, the more disputes you get. Ask Ken, he made a career out of it. So the question is, what are the things that we have to keep in mind when we think about the disputes of the future? And I think there are a couple of things to think of, to keep in mind. One is, if you look at firms which actually handle these disputes today, or thinking about the next generation dispute, or thinking about talent management, we're just not there yet. Unfortunately, you have to build the talent pool and the expertise to be able to resolve many of these disputes, assuming that we finally agree on many of the aspects that we heard about just now. So one thing to keep in mind is to start the training and the expertise today, and not to wait for the disputes to come half a year from today or 2 years from today. Secondly, is to think about where we actually gonna conduct these disputes. So many years ago, when people thought about IP or tech-related disputes, Texas, for example, was the first jurisdiction that came to people's mind just because it was considered private sector friendly. I think we should all live in a world where every jurisdiction is private sector friendly, in the sense that we should all understand how the private sector thinks about innovation, creating the product, and eventually, unfortunately, ending up in a dispute that needs to be solved. Another aspect to it is the size of the disputes. As Ken and Felippa reminded us, there are so many fintech solutions, so many disputes actually will be what maybe sometimes even called small claims world. In other words, these are small commercial tech-related claims, and we have to, and organizations like the ICC, International Chamber of Commerce, and others started to build these kind of forms where you can have efficient, quick ways to resolve small digital economy-related disputes. And then finally, access to justice, which is of course kind of the elephant in the room in today's discussion about democracy. We have to make sure that from New York to Indonesia and Felippa's region, when people have access to digital economy, and sometimes they do because of leapfrogging, they will also have access to the judicial procedures in the future to resolve solve and resolve some of these disputes. I can tell you that, and here I want to finish, that sometimes we have this kind of artificial distinction between the digital economy and the old economy. In the old economy, you say, energy, infrastructure, petrochemicals, and then the new economy is e-commerce, trade in e-goods, etc. But the reality is that everyone is using digital solutions today. You have the whole world of Industry 4.0. There are some great technologies in old school manufacturing and renewable energy, etc., etc. So my point is that this kind of dispute resolution mechanism should not be understood only in the context of the new economy and digital economy, but actually helping what used to be called old school industries or old school sectors like energy, infrastructure, chemicals, etc., to help them to solve disputes that they have related to their data management procedures. Because obviously there is a difference between expropriation of a huge pipeline in a Latin America country versus dealing with the theft of IP asset of a large energy company based in Southeast Asia.
Thank you, Effie. We did have a question from the audience regarding exactly one thing you touched on, which is like, what are the forums that can be leveraged to share these ideas, experiences, and potentially have dialogue around how the global economy, digital economy should be regulated, as well as how do we resolve disputes. I wanted to see if, in addition to the International Chamber of Commerce, might there be, a need for a new global regulatory tool that focuses on digital. And part of that is, sometimes the issue is that the laws are on the books, but the judicial capacity to implement them because of fully understanding what the sort of technologies involved or the IP and the trade secrets, et cetera, there's a big gap there. So is that something we're missing, not only getting the laws on the book, but making sure different branches of the judicial and regulatory regimes have the capacity to fully understand and enforce them? Effie, I'll throw that back to you and then turn it over to Ken and Felippa to chime in.
Sure. So this is a terrific question, and thank you very much for raising it. Like Ken's point before about industries that regulate themselves, I think quite often the companies that create the technologies, they know best what are the vulnerabilities that eventually lead to a high volume of disputes and more efficient ways to do it. So we already see industry led initiatives to find new, quick, efficient ways to solve these disputes. But obviously large multilateral institutions, in addition to the ICC, are a great place to look at it. I'll just give one example. WIPO, the organization that deals with technology and patents, they have their own division dealing with tech disputes. And obviously it's been relatively on the smaller side and it's been growing over time, and I'm sure we'll see growth there. Another way to think about it is that all the multilateral institutions, from the UN to World Trade Organizations to WIPO and others, they have their own divisions to deal with disputes related to their own operations. And since now, fortunately or unfortunately, depends on your perspective, they cover so many different aspects of the economy, you can actually use all these organizations not only to come up with a funky, interesting, innovative legislation, but also ways to solve it. Ken, please.
No, I didn't have anything to add to those points. I think you stated quite eloquently, Effie. So maybe Felippa has a point she wants to make.
Sure, no, I agree. Absolutely agree with what Effie mentioned. But I think coming from a civil society perspective and from a think tank non-player and also a policymaker, I think there's also space for civil society to build or shape or make that forum, because we're seeing in Indonesia, there are very, very few opportunities or spaces like that. And yes, I agree with multilateral approaches and multilateral forums, but as we all know, they also have some limitations on navigating through diplomatic and national interests, things like that. So I think sometimes also civil society like CIPE, like CHIPS as well, can actually have the opportunity to build such forum, and having these kinds of dialogue more often and bringing together private sector and policymakers more often to have just building on the dialogue. I think that would also be an interesting opportunity to explore further.
I think we are focused, and I think quite rightly so, on building out the infrastructure to echo one of Effie's earlier points. But there are still issues on the front end, if you will, that I think still need to be solved. For example, to the extent any part of the digital economy is on the blockchain, there are scalability issues that need to be addressed. You're not going to have growth until you address those scalability issues. Similarly, given the large amount of consumer data that will be collected by key players in this digital economy space, how do we deal with the data privacy issues, the cybersecurity issues, the misuse of all of that information, for example, for granting loans or processing transactions and so on? I think those are very, very serious and significant issues that need to be dealt with at the same time that you're dealing with how do we resolve disputes at the end of the day.
Thank you, Ken. I couldn't agree more with that. I realize we're running very tight on time, and I have two possible closing out questions. So it's your choice which one you answer. One is, what didn't we discuss today that you think should have been a topic that is top of your mind? And the second is, for our audience out there, who or what are you reading or following to stay abreast of, the regulation of the digital economy and the digital economy's impact on economic recovery post-COVID? Ken, I'll send it right back to you, then to Effie, and we'll finish with Felippa. Thank you.
Well, on my reading list every day, actions coming out of the SEC, because I am really looking for some clarity, some guidance beyond a court case from the 1940s, by the way, as to how these things are going to be treated from a securities law standpoint. So I would recommend that to be added to anybody's reading list.
Thank you, Ken. Always good to hear your recommendations. I'll suggest the human element, Louisa. We probably, if we look back at this workshop 20 years from now, we will see that we use the term tech or digital probably 30,000 times, but we use the word human maybe once and not even. And I think especially since we're so obsessed in a positive way about the digital economy and economic growth, we should always remember that digital economy is created by humans with great ideas, humans who actually consume the products, and humans who end up in court or other places in order to solve digital economy related disputes. Where can you find these humans? Surprise, surprise, they're here on the screen. Many of them listen to us right now. Many of them are friends and colleagues and partners and family members. So I think one thing to keep in mind is that when we run so fast in this digital economy era, what's the role of the human in this process? And here I'll connect it to your question about books and what people are reading. I think there is a new line of books. I want to recommend one because it's going to be a scene. There are a few of them that they try to, instead of teaching humans how to use artificial intelligence and big data, and data is based on today's discussion is the biggest gold mine. Instead of teaching the humans how to use AI, is how to teach the AI machine how to think in a human way. In other words, when we build companies like the ones around this virtual table, how to teach the machines that we use to be a little bit human, more ethical, more considerate. I know it sounds like a dream. Even saying it sounds a little bit fantastic, but the reality is that this is really the future that we all going to live with. And thank you very much, Louisa and CIPE, for bringing us all together for this fantastic discussion. Felippa, your last words, please.
Thank you, Effie. I think I completely agree with what Effie said, and I think that's a good way of closing it. We've been talking about the supply side a lot on this discussion, but on the demand side, consumers' digital literacy, I think, is something that we haven't really touched on, but would be very, very crucial to actually harness the potential of the digital economy, because how the consumers can utilize the digital economy more in the maximum way instead of, and then moving away or shifting away from, or minimizing, I guess, the risks associated with digital economy. That's not just from the role of the private sector and the policymakers, but also from the consumer side. How can we increase our knowledge about the importance of our data? How can we protect our data? How can we protect our cybersecurity? How can we make sure that we're not then spending and taking lots of loans from financial technology or approaching cryptocurrency without any financial and consumer and digital literacy skills? So I think building on the human users themselves and their skills to adapt to this digital economy age, especially for, again, low-income Indonesians, low-income communities everywhere, and marginalized communities, so that digital economy can actually benefit everyone in an inclusive manner. That would also something that we're looking forward to.
Thank you so much to all three of you. This has been fantastic. I really value your insights, and I look forward to continuing the conversation. And I also look forward to welcoming our audience to the future sessions coming up, supported by Kroll Institute and CIPE. Thank you, everyone. Have a wonderful day and a wonderful evening. Take care.
Thank you, everybody. Bye-bye.
Thank you so much, Louisa, Ken, Alfie.
I'm here. Thank you.
Thank you for the audience and all of you. Bye-bye. Take care.